I mean, having your business loan approved is just a sweet sound that everybody wants to hear every now and then, right? It's a good feeling. You've done the hard work and you're approved. It's just fantastic. And so in today's conversation, I want to share with you a few hacks, a few tips that you can actually implement to improve your chances of being your business loan approved all the time, not just once, all the time. So here are the steps I really want you to pay attention to. Really, there are certain things you need to do long before, way before applying for the card itself, apply for the loan. Let's say you want to apply for a business loan 3 months from now. Those are things I want you to start doing right now. First of all, you want to tidy up your personal credit. Okay, this is important. You might be thinking, well, what does my personal credit have to do with my business loan application? Well, it does have a lot to do. Unless you have an established business and you want to apply for a business loan using EIN only, chances are the lender is going to pay attention to your personal credit when evaluating your business loan application. Okay, so your personal credit becomes one criterion among others when it comes to evaluating your application. Okay, so make sure you tidy up your credit score, your personal credit. So that means that you actually check your credit score. If there are any issue, you want to fight those issues systematically and reflexively. You want to contact the credit reporting agencies, Experian, TransUnion, and Equifax, and make sure that they actually correct whatever derogatory items is invalid on your credit report. So it's really important. So this is the kind of a mindset I want you to be in. Okay. So by the way, welcome back to the show. It's really a pleasure to have you here. I love having this kind of conversations every now and then. And so after you tidy up your personal credit, the second thing I really want you to do here is to create a rock solid business plan. A lot of times, some viewers don't like to hear this. They think, a business plan is some kind of foreign language and they don't want to touch it. Lenders want to make sure that you will use their money appropriately. They want to know what you use their money for, and they will also want to see that you've got a strong ability to repay the loan. So a business plan is the most common way lenders obtain this information from you. Okay, so before applying for loans, you want to create a rock solid business plan that clearly demonstrates how your business will have the cash flow required to cover operational expenses plus your loan payments. The third thing I want you to do here is to look at your debt situation, and I want you to reduce your debt to income ratio. Okay, if you want to have your business loan approved all times, you need to be in a situation where you're constantly working like crazy on reducing your debt to income ratio. So on both the business and personal sides, you need to reduce your DTI ratios as much as possible before applying for a loan. And this is one of the most basic factors lenders look at, because if think about it, lenders are trying to cover their asses, right? And you are trying to do the same. You're trying to get a low APR, trying to get the loan that you need at very good terms. So, but I want you to picture this. If your debt is too high compared to your income, lenders see this as a sign that you might not make your payments, because again, where are you going to get the money from to pay them? Because you already are paying a lot of lenders already. Okay, so this is important. And by the way, here is today's topic. I just want to remind you so we can contextualize or recontextualize the conversation we're having here. So I'm giving you a few tricks, tips, and hacks to get your business loan approved, and approved all the time. Okay. So step number 3, you want to reduce your debt to income ratio. Very important. Step number 4, you want to keep your daily bank balance as high as possible. See, the whole thing here is that lenders, going back to what I said, lenders want to make sure that, you'll be able to repay them. I mean, okay, they're very risk averse, and they want to make sure you have the necessary cash flow to repay them. How do you show that, among other things? Well, by keeping your daily bank balance as high as possible. Some loans are approved based on a daily bank balance instead of a business income. Also, lenders want to know if you have cash on reserve to make your loan payments. Now, why do lenders want to base their loan decision on business income instead? Why do they want to base it on cash flows instead of business income? This is very simple. Cash is queen or king, as they say. On top of that, business income can be manipulated. Okay, for those of you who know a little bit about accounting 101 or accounting 102 or advanced accounting, you know that you can manipulate income. But cash is really harder to manipulate. Like, because if you're showing me a number on your company's statement of cash flows, and I look at the bank and I see that like a big gap, a big delta, I know you're lying. But for income, there's no way to actually find out. The next thing I want you to do here is, if I'm still talking to you about things you have to do way before you apply for a business loan, not a few weeks. I will speak about things you have to do a few weeks before applying for the loan itself. Now I'm talking about things you have to do way before. Okay, you want to actually boost your business as much as possible prior to applying. So you can boost revenue by consulting with a professional marketing firm to launch a new campaign. You can run PPC ads on a regular basis and then using retargeting. So PPC stands for price per click. And this is the kind of ads you run on Google, Facebook, Twitter, whatever. And you are basically using retargeting, meaning that you are constantly redirecting those who have those customers, or those prospects rather, those prospects who have expressed interest in your product or services. You want to actually refunnel them through the right destination. Okay, you can also boost revenue by capturing emails and running an email marketing campaign to nurture leads until they become paying customers. Okay, very important. And so there is always something you can do to boost business revenue and show lenders that you have the ability to repay the loan. And so you need to know your business and personal credit scores. Okay, before you even do anything, make sure you know your personal credit. So your personal credit scores, we all know it goes from 300 to 850. Okay, it's very easy. You can actually reach out to certain websites. You can go to annualcreditreports.com to actually get that data. Not a problem. Okay, and if you get that data from TransUnion, from Equifax, or from Experian, you're able to actually look through the data, dig a little deeper, and grow granular here. And if there are things you believe are erroneous, you can file a dispute. For your business credit scores, you have to contact those three players individually. You have to contact your Dun & Bradstreet. You have to contact Equifax. You have to contact Experian, so you can have a clear idea of your paydesk score and your Intellis score also. So those are really important. And for the paydesk score, for example, the scores go from 0 to 100, with 80 being about where the sweet spot really starts at. Let me give you a few pro tips here. So the 6 things that I just mentioned to you are things you have to do way before you apply for a business loan. Now I want to share with you a few things you have to do 1 or 2 weeks before applying. So this is really, really important. Okay, what you want to do first, you want to define the purpose of the loan. So the thing is, when you express your interest to borrow from a financial institution, the business lender also always asks why you want the loan. So be sure to outline your needs before approaching the lender. So whether it's starting a business, growing your company, managing your day-to-day expenses, or providing a safety net, the lending institution will want to know. Okay, and they want to know for several reasons. First, they want to know for regulatory purposes, to make sure you're not participating in some kind of money laundering. Okay, so this is called AML laws, and it's also part of something called KYC, know your customer. Okay, so that's one reason why the banks want to know what you're doing, what you're doing with the money. The second thing is the bank wants to make sure that you are using the money properly to actually further really forward, to actually bring your company forward. Okay, for instance, banks and online lenders will assess your cash flow to evaluate your ability to pay. So most of them will decline your loan application if you are looking to start a business, since you will not have any records. Okay. By the way, I want to quickly remind you of today's topic. What are we talking about? We're talking about a few hacks and tricks and tips that will help you get your business loan approved. Okay, this is the main goal here. And so another thing you need to do here, after defining the purpose of the loan, is to raise your loan security. So a lender can decline your loan application for many reasons, but lacking collateral is one of the biggest hurdles. So if you want to get a loan successfully approved, try to see if you can collateralize the loan, okay, in the first place. Okay, so If your business cannot raise the required security, consider exploring no collateral business loan options. However, no collateral loans are not entirely unconditional. The lender might require you to consent to a uniform commercial code UCC lien or sign a personal guarantee. So those are things you need to be think about. Remember that a personal guarantee is an agreement that you are personally responsible for the business loan. The lender cannot attach any of your business assets if you don't pay the debt, but they can take legal actions against you. The next thing I want you to do here is to compare different lenders. Okay, if you are trying to get your business loan approved, you want to start by actually talking to the right lender. Okay, a lender with whom you actually have a high probability of loan approval. Because don't waste your time on any other lenders. That will not be strategic enough. Okay, so compare different lenders. So when we talk about, so what kind of lenders, what kind of loan rather, do you need right now? Do you want to go with a traditional lender? Let's say, do you want to go with the bank? Do you want to go with a local bank, with the rural bank, with the state bank, with the national bank? Do you want to go with the regional bank? Do you want to go with a credit union, a national credit union, a local credit union, a state credit union, a members only credit union? Okay, it really depends because as you know, credit unions are restricted by geography, profession, biology, and all other criteria. Okay, and so you need to know the loans. So for traditional loans, you can actually qualify for a loan between $25,000 and $5 million, payable in monthly installments. Okay, and so banks do offer reasonable low APRs on loans. However, many small and medium-sized entities that don't qualify for the offers due to low sales volumes and inadequate cash reserves. And other factors include the business owner's bad credit and lack of collateral. So you also have online small business loans. Okay, those are more those have more lenient qualification requirements. So if you have Lendio, you have Bluevine, you have OnDeck, you have SmartBiz, you have Kalamata, you have a Balboa. You have a lot of online lenders who are more, I would say, more flexible. Okay. And so after comparing different lenders, you need to choose the right lender for you, because and what you can do here is that you can try to use an online platform such as Lendio or NBC, National Business Capital. Those are loan marketplaces, and they aggregate loan offers from different lenders, and they just present it to you on a single page. So you might want to think about those lenders instead. One thing I want to do here, if you want your business loan to be approved and you want to get the great news of a business loan approved, and you want to have that sweet sound in your ear, it's really important to know the lender's requirements. Okay, and what is the lender asking for in terms of business revenue, in terms of credit score, in terms of operational history, in terms of industry and sector, in terms of cash flows, in terms of balance sheet, collateral, those types of things. The more you know about your lender's requirement, the better your chances of being approved. And those are really facts. Okay, and it's really important to understand that the lender is not going to work with you if you do not commit to their requirements, or even if you don't understand. Okay, the next thing I want you to do here is to determine if you qualify. Okay, so you know that you have heard about the lender's requirements. Okay, now the question is, did you qualify? Because you need to actually evaluate those requirements versus your own profile to see whether or not you qualify. And when we talk about qualification, we basically talk about five things. Okay, we talk about credit score, we talk about annual revenue, we talk about business plan, we talk about financial statements, we talk about collateral. Okay, so those are really important, and some lenders will also want to make sure that you are a legit business. In other words, they want to look at the admin and regulatory foundation of your business to make sure you are properly incorporated, or you're properly organized, you properly have the right LLC, the right LP, the right LP, the right corporation, S corporation or C corporation. Because again, those are really important, because the lender wants to make sure that your business is significantly divorced from your personal affairs, so that if anything happens, you'll be able to let the business determine things on its own. Okay, and you know, it's kind of cool for you too, because you are preserving your personal assets and nothing will happen to you. So this is kind of cool. Another thing I want to say here about the business plan is that, remember, the business plan is your ability to actually show the lender that you are going to use the loan funds, the loan proceeds responsibly. The next thing I want you to do here is, if you want to have your business loan approved, make sure that you gather your documents and apply. Okay, and we are talking about having the proper documents. Okay, not all kinds of documents. Sometimes less is better. You know, we have covered on this show low doc, no doc business loans. So you got to really inquire about the paperwork requirements with the lender. Okay, things like business financial statements, personal and business tax returns, your 1065, 1120S, 1120, your 1040. Okay, those are really important. In addition to the ancillary, as I said before, the ancillary schedules that come with it. Okay, and for the business tax returns, you have the ancillary schedules. You have schedules K1. And so the final thing I want you to do here is to review the terms and sign. So if you want to actually get your business loan approved, after doing all the work, after defining the purpose of the loan, raising your loan security, comparing different lenders, choosing the right lender, knowing the requirements before applying, determine if you qualify. If you do qualify, then you have to actually review the terms of the loan and sign. Okay. So when we talk about the once approved, you need to examine the loan agreement before signing. So please don't be too euphoric. Like, I've got my loan. I forgot about the fine prints. I don't want to read about this anymore. Just too complicated, wasting my time. Don't do this, okay? You need to pay attention to the interest rate you are offered, the annual percentage rate. Those two are different. The interest rate is different from your APR. Pay attention to your payment schedule. Okay, are you paying on a monthly basis, or are you paying rather on a weekly basis or a daily basis? Because this will have an impact on your cash flows. If you're paying on a daily basis or a monthly basis or bi-weekly basis, you basically stand a chance of having a higher APR, because you constitute a bigger risk to the lender. Okay, think about the origination fees. Think about the loan terms. Think about the prepayment penalty. Okay, so this, along with other factors, can significantly affect the true cost of credit. And so if you're comfortable with the terms, you want to sign the agreement and wait for the funds to arrive in your account. Okay, and one thing I also wanted to say here is that if you want to consistently have your business loan approved, you need to be in a situation where you have a set of templates. You have a set of templates you always go by, that the lender likes to have, and you want to develop a certain level of discipline, so that you can actually sell. You can put you can actually put. How do I say it? You need to develop a sort of financial discipline, so that you're able to see and analyze business loan applications real fast. Thank you so much for your attention. I really appreciate it. In today's conversation, I'll just talk to you about how to get your business loan approved real quick. And, there are things you need to do way before applying for a business loan. And there are things you need to do 2 or 3 weeks or 1 week before applying for a business loan. Let's first start with things you need to do way before. So you want to tidy up your personal credit, create a rock solid business plan, reduce your debt to income ratio, keep your daily balance as high as possible, and boost business as much as possible prior to applying. So here are the things you need to do 1, 2, or 3 weeks before actually applying. Define the purpose of the loan, raise your loan security if needed. You want to compare different lenders. You want to choose the right lender. You want to know the lender requirement before applying, and determine if you qualify, and gather your documents and apply, and review the terms and signs. So thank you so much for your attention. I really appreciate it. God bless you. I'll speak to you another time. But until then, remember, stay marvelous.